So let's get to the charts. So what we're looking at here, this is the my Robinhood's Legends chart. The right side shows the candlestick chart, and the left side shows the line chart. So what's the difference in the candlestick chart and the line chart? Why would we even need both of these? Some traders don't. I like to use both of these charts just because the candlestick chart actually gives me the price action for a period of time. If you can follow my cursor down here, you'll see a 5M. That represents 5 minutes. I can open up this area and show different time periods. I got a 30 minutes, a 15 minutes, a 5 minute, a 1 minute, a 30 second, a 1 second. All depends on what type of trader you are. I'm a day trader. I normally in and out the same day, so 5 minute time frame is pretty much all I need. So as we go over to the right side of the chart, this is a line chart. It just shows direction. It doesn't give you that time frame, but when I look at both of these together, it gives me a better indicator of where the market's going in that period of time. A couple things to call out before I get into the breakdown of Friday's trade is, as you look at the candle charts, I'll go to a candle chart 100% so you guys can get a better view. As you look at the candle chart, each one of these, if you can see my cursor, I'm on this large green candle. That's what we call a candle. Each one of those represents 5 minutes, no matter what. Every candle in this chain represents 5 minutes, even these little small ones. So that's telling you something. So here you see you have what we call the candle body, a small candle body, and this is what we call the candle wick. So what happened here? This shows price. If you look over here to the far right, you'll see the top price of this candle body is at $650.07. If you look at the top of this wick, it is at $656.75. So that's roughly a $5 move that happened within 5 minutes. And when you see wicks like this, it probably happened in 30 seconds. So it wicked up and came back down. That's just to kind of show you the anatomy of a candlestick chart. Here's a long solid candle, which shows that it took 5 minutes to go from 645 up to 647. So a $2 move in options, that can be as much as a 40% gain on your money. So just easy math. If you were trading a $1,000 trading account and you got a 40% gain, that's $400 profit that you would make in that 5 minute time frame. So we'll go back to my main layout. So the trade that I made Friday was a put. So people who are familiar with options, you know that you can make money on puts and calls. So I actually, guys, will take a look at the candlestick portion of side of my chart. So as I scroll from left to right, if you look down here in this bottom area, you'll see time. So right now it's showing March 20th at 9 o'clock. So that's when the market's open. So as you follow my cursor up to the top, you see this long red candle at market open. Then you see a smaller red candle. Again, that's 5 minutes later at 9:35. And then you see a large green candle. This large green candle didn't amass the size of the large red candle, which is a sign, not 100%, but it is a sign that tells us that, hey, we couldn't get back up to where we were, so we may be going down further. So the next candle is a red candle. You can see it has a small wick on it. It went up to this top area of 656. And before I continue, these yellow lines, so there's one yellow line here, one yellow line here, one yellow line here, one yellow line here, and one yellow line here. And these lines, they coincide on my line chart as well. So I've drawn these lines in. These lines are areas of support and resistance. So at one point, and some of these lines go back days for me, or it may be weeks that I've drawn in. These areas of support and resistance, they seem to hold true for most of the time. So back here, you see we did not go above my area of support, and we started getting beat down. So this red candle here was the beginning of it. We came down on the second red candle. So the third red candle is where you're getting price confirmation, where it says that three red candles in a row, we normally continue that downtrend. So one thing about the market is patience. Patience is the key. So I could have hopped in and bought that put, which means I think the market's going down, bought the put and rode this put all the way down to my area of support, because it came right down here. And these lines were drawn before these candles started to form in this area. So it comes down here, and then it bounces back up to the top yellow line, which is a line of resistance, and then it rejects again. So what I'm looking for here is continuation, either a breakout continuation to the upside or a breakdown continuation to the downside. Of course, you guys get to see the whole picture before it happens, so you see where it broke down to. So another tool that I use when it comes to trading is, if you can take a look at this pink line. This pink line is what we call VWAP. It's right here, VWAP. VWAP is volume weighted average price. So that's an area that the market, on an average time frame, price has kind of ridden either below that or above it. So what I use VWAP as, and before I get into VWAP, another area, another tool that we use is the EMA. This is, if you see here, EMA 20. This is the 20, and you can set these numbers on whatever you like. I like the 2021 EMA. That's a exponential moving average. So that tells me that this price for the last month has been hovering around these areas. So one thing you'll notice, that once it breaks down below VWAP, once it breaks down below the 21 day becomes more of a trend line, and it just follows the 21 all the way down until it breaks up here. So one thing I would like to call out is, you see a cross here where my 21, the purple line, has crossed over the VWAP, the pink line. That is normally a sign to a continuation to the downside. Doesn't mean it's gonna go to the downside, but that is a sign. So when I see multiple candles going down, long top wicks, meaning that we try to get back up and we got pushed back down, a crossover my VWAP from the 21 MA, now I'm looking for a entry to the downside. So from this candle to this candle started at 9:55, and this candle started at 1:05. So that's from 9 o'clock to 1 o'clock, just in a sideways trend. This is where patience comes into play. You could have gotten in early in this, but a thing in options called theta, which is time decay. So the longer you stay in a option sideways trend without either breaking down or breaking to the upside, you lose value on those options. So when that move starts to make itself to the upside or the downside, you won't make as much money. So maintain patience here. Now, I see that we have not broken through here. What I'm looking for is a retest of VWAP. So once we retest VWAP, this is the candle that I want to buy on. So what I did in this particular instance, I purchased my puts, which means that I think the price is going to continue to the downside. But what I also do is I put a stop loss right up here at 653.86. So what that means is you can't predict the market. You know, what you're doing is you're looking for a trend and you want to ride that trend. The trend seems to be to the downside, so that's what I want to ride, is a trend to the downside. Stocks normally, I'll say 85% of the time, bounce off of either EMA or VWAP. In this case, VWAP is where it bounced from, but it could have continued up and kept going up. So what I do, I put a stop loss here, and what that means is if the stock goes up and it hits this price, it sells my shares, so I don't lose all of my money. So for instance, if I purchase a $1,000 put, which means I think it's going to go to the downside, but it breached my VWAP and continued to the upside, I would sell and take $100, $200 loss. But as you see here, it worked out. It did not breach to the upside, so it started to trend down, and it started to trend down even more. So now at this point, I'm looking for a retest of VWAP or a break above my 21 day. So as long as it doesn't break my 21 day, I stay in the trade. Now I have a line here. This is a line of support, meaning that historically the price has bounced from here. So I take profit. I get one candle down and I take profit. I get out. You know, one of my mottos is you never go broke taking a profit. But as you can see, it continued to trend down and continue going down. At this point, I was at probably 70-80% profit, which was roughly $3,000, $3,100. So I was fine with that. I took my profit here. The market continued to go down. Another leg down to 645. I took my profit at 648, so it went additional $3 down. Again, $3, that's probably another 70 or 80% of your money. So it hit the 645 area and then it bounced hard. And then I'll go over here and we'll take a look. Actually, I'll bring this chart in. As you can see, it bounced and it continued to skyrocket up. At this point, I'm out of the trade at this point, and I've taken my profit. So things to call out here. A couple things to call out is this area here. This is, if you ever hear me refer to RSI. RSI is Relative Strength Index, and that just tells you how strong the market is. So if you're looking at RSI, there's numbers on this side column here. And when you're looking at RSI, this is what, if you were in a trade or the markets were open, this is what you'll see. You can't see the future, you'll see the present. So presently, RSI is at 46.39, which is a neutral territory, which means we could be trending sideways. But it's actually pointing down, so we could be eventually going down. But before I consider us going down, I like to see us around 37, RSI 37. Normally the market continues to go down. If we go back to where the market started to trend down in this area here, I go right down to RSI. We were at around 39, 40. And when it really started to take off was at 37. And from an uptrend for RSI, when we hit this area, which is almost an oversold area, we're at 73. So when we're at about 56 to 60, the market is normally in a uptrend, and we could be continuing up in the market. Those that's another tool that I use to predict when do I want to get in and when I want to get out. Another thing to take into consideration is volume. So you see red and you see green, but you see volume kind of ramping up, right? Red means that the market is selling off and we're getting a lot of volume into the market. green means that buyers are coming into the market. But as long as it's going up, we're getting a lot of volume into the market. So as you see volume increase, RSI pointing in your favor if you're looking at puts, and us being low a moving average, that's a good sign to let you know that this may be a good trade to get in. So that was just a quick recap and run through of line charts and candlestick charts and moving averages. Thank you guys for taking the time to look at this video. If you have any questions or want to learn more about the market, please leave me some comments. I'd love to answer any questions you may have. If you find value in this video, give me a like, thumbs up, and subscribe to the channel.